Eric Muadeth, Muadeth.com, with the US market analysis for the weekend of October 8th and October 9th, 2016. Let's take a look at markets here. On Friday, market pretty much had a down session, slightly to the downside, let's say. We see that crude oil was down about 1.7%. The VIX was up about 5%. Let's take a look at those charts. So to summarize this video, one thing we're going to see in the current market environment is we are pretty much stuck in a wedge type formation on the small time frame, the dailies and the hourlies and the 30-minute chart, for example. We are stuck in this wedge formation in terms of price and even RSI. We don't know which way the market is going to resolve, either to break out for a move higher or to break down for a move lower. Right now, my thinking continues to be that more than likely the charts are suggesting we should be expecting markets to move lower after they get out of this wedge. We shall see. Let's discuss why I think that by taking a look at the charts. First and foremost, let's take a look at the Nasdaq here, and we can see that on a weekly basis we continue to hold above the previous weekly closing high. Another way of saying that the market continues to be healthy, in that the Nasdaq right now continues to trade above 5249.50. Anything above that, which is the previous weekly closing high, is a breakout, and a good breakout at that. At the same time, we know that if the market breaks down and moves back below that number of 5249.50, failure to hold above that breakout level would be bearish. Let me show you something real interesting on the Nasdaq 3-year weekly chart. So Nasdaq 3-year weekly. Want to show you a simple line that connects this low here through this low, and just extend that line like that. This is something we've been watching, because ever since we broke below this level here, the market came off the highs here. We had that drop, relatively huge drop during this period, and ever since we've been coming back, tagging that red line, that blue line showing resistance, and the market at every point has seen a relatively big drop as far as the Nasdaq is concerned. And you can see what's going on right now. We've hit this once before, so we've shown resistance there for the highs there, and now we are coiling back down after hitting that blue line. So again, let's do this one more time. We got this simple line here that is, generally speaking, a problem for the Nasdaq. So that's why I'm saying that even though some of the charts continue to be in a wedge, some of the things that I look at are pointing to a market that could conceivably be setting up to go down. One other thing we should not forget is the Nasdaq monthly chart, and this is 3 years worth of data. We had an improvement in price highs, of course we know that. So the market made a higher monthly closing high, but at the expense of the monthly RSI. As long as the Nasdaq is down for the month, one should be very at least suspicious of markets probing lower levels, because of this negative divergence. An improvement in price highs that was not confirmed by a higher high on the RSI is generally not a good setup. In fact, if we test this resistance level here, which happens to be slightly above 61.8, we can see that this is where the market has had problems going back many years. In fact, if you take a look at this 25-year monthly chart, I'll show you a little bit of a resistance level. So draw a line connecting where the Nasdaq is stalling right now, and just go backwards in time. All right, so you're gonna see this break was this period, and of course we had this major 2003 bear market. We broke below the red line in late 2007, which led to this major bear market in 2008. And over the last year or so, we've come back and hit this same red line once before for the highs in late December, and now we are doing the same thing in early October. So as long as the market is down for the month, this is not a good picture. In other words, the Nasdaq needs to be positive, otherwise a negative month here would confirm again this improvement in monthly closing highs, but the RSI has failed to do the same. That negative divergence is generally a setup for lower prices. And in this particular instant, we can expect after a nice major bull market going back to the lows of 09 that this would mean a major correction lower if this negative divergence continues to hold. Let's take a look at the Dow Jones. I'll draw a simple line that we drew last weekend. This weekly chart needs to hold this RSI support line. As long as this line is holding, the market should be relatively stable. Otherwise, failure to hold this blue line on the weekly might be a problem. On this Dow weekly chart, we can see that if you take the weekly closing highs recently, you form some type of a top side line or a wedge. And also here, if you take the bottom side of the weekly closing lows here, you form some type of a wedge. In other words, the market is stuck in a wedge. Let's draw that again one more time. Price wedge here is also taking shape. So eventually we'll see which way it goes. In fact, you can see this very clearly if you take a look at the 30-minute charts. And for the Dow, you can see that there's some type of wedge forming here in terms of price action. So eventually we might have to break out to the upside and have a nice swing trade higher, or we break down for the next swing trade to be down. Take a look also at the RSI, still within this wedge. So also the RSI could break out for the next swing trade being higher, or break down for the next swing trade being lower. And we can see the same type of formation by taking a look at the S&P 500 30-minute hourly chart. And again, you got wedge formation on the RSI. You got prices still stuck in a wedge. So one way or the other, we have to wait for this to resolve. I personally think it resolves lower, and I'll show you why. It is taking a look at the Dow Transports. On the daily chart for the Dow Transports, you can see there's top side resistance right there. In fact, the market hit that line twice this past week. Here, right there, and again here. So you got double top resistance on that line. And there's also another line coming off this break, trend line break there, off the highs here. That has been a problem if you draw a line from there, somewhere there. And you can see that every time we hit that line with uniform activity rejection, the market makes a short-term high. Uniform activity rejection here for short-term high. Uniform activity rejection for the highs of early September. And now we are coming back and showing again double top rejection on the same line. So again, double top rejection over the last week or so. So the Dow Transports, in my opinion, are still pointing down. Now take a look at the SPX on a monthly chart. And this is something we've been talking about over the last couple of months. Is as long as the S&P 500 is showing this type of negative divergence, where we had an improvement in price closing highs, yet the RSI made a lower high. Now keep in mind that this resistance on the monthly chart for the SPX is at about 61.8. So 61.8 on the monthly. That type of negative divergence is the worst type of negative divergence according to my research. And also if you draw a line here, let's draw this a little different. If you draw a line off this resistance level, you'll see that this is where the markets have been running into problems over the last, let's call it 25 years or so. We got a break here in 2000, which led to this big drop. We got another break here in late 2007, which again led to this big drop. And now we have resistance on that red line. I don't think this is a small deal. I think what this means that as long as this chart continues to show resistance on this level here on the monthly chart, it suggests that markets are setting up for a major correction. Let's even call it a bear market. And again, all this is dependent on whether the market continues to show the same negative divergence on the monthly chart and RSI showing resistance at 61.8. If these two things are still taking place, 61.8 resistance and negative divergence on the monthly, one can expect a major move lower. And keep in mind, this might take weeks and months, not necessarily every minute or every day. For subscribers, be on the lookout for part 2 of this weekend's market analysis video, where we shall have some ideas discussed. Otherwise, good luck, peace, and blessings. Riches, blessings, blessings, blessings.